Myself, Vaibhav. In today's session, we are seeing that most of the financial instruments are trading in a range. There is not much of an volatility, and I think unless and until we get some substantial development which might move the markets, we are likely to see this consolidation phase lasting and as we see that the AUD USD has been consolidating with the upward bias, I am expecting this trend to last and AUD USD might extend the gains on the upside. So we will see how we can profit from such a possibility. So we will try to find out the optimum entry and exit points. Before that, we will take a look on the trading context for the day. Earlier in the day, during the European trading hours, we got the Germany's IFO business climate indicator numbers, and here, as you can see, we saw the IFO business climate indicator dropping to 92.7 from the prior reading of 93.2. The drop is not substantial, but you have to just mark the turnaround in the sentiments amongst the business people, and this is the major trend. And if we see that the case of other economies also, there is a turnaround as the coronavirus infection is again showing resurgence, and because of that, it has resulted in the dampening of the sentiments across the board, and that is being reflected in these business climate indicator numbers. The current conditions as well as the IFO expectations have dropped from the prior month's number, so we will have to see how it reacts to this ongoing uncertainty moving forward. We also got the United States Chicago Fed National Activity Index, and here is also the decline is being seen. And for the month of September, now the National Activity Index has dropped to 0.27, which is a lot lower than the expected reading of around 0.39 and substantially lower than the prior month's reading of 1.11. In a while, we are also scheduled to get the US housing data. Here, we will be getting the new home sales, and in terms of percentage, we are expecting the growth of around 3%. And in the prior month, the reading was 4.8%, but that growth is not likely to be sustained. And in absolute terms, we are expecting the new home sales to be around 1 million units. And after that, there is a scheduled release of the last Fed manufacturing index, and here also some moderation is being expected from the prior reading of 13.6. For this month, we are expecting the reading to be around 10. Now let's move on to the technical segment. Here we will cover the AUD USD first, and then we will also see if there are any possibilities for the trading setups in the gold. Let's start with the AUD USD's technical outlook first. This is the daily time frame chart for the AUD USD, and on the daily time frame chart you can see that the underlying bias has been for on the upside, and after this extended rally which started around 0.55, we can of course uh, see that this consolidation phase is quite natural, but the underlying trend is still on the bullish side, and if we look closely, we can see the double bottom kind of formation taking place closer to 0.70 level. We saw this turnaround happening twice as the AUD USD's price approached 0.70, and then this sharp reversal happened. Here also, the case was fairly similar. After these gains, we have seen these sideways consolidation around 0.71 with the bias remaining on the upside. And I think we are likely to see this consolidation last unless and until there is any swift reversal towards 0.70. And as of now, it looks like the 0.71 level is likely to act as a good support, and we can expect in the latter part of this week the AUD USD trying to move towards this immediate swing high, which is there around 0.72. So keeping that possibility in mind, the setup which we will try to get involved with should be providing us the optimum entry and exit points, and for that we will have to rely on the lower time frame charts here. The regression curve after this extended consolidation is showing the signs of flattening, and that's one of the good indication that we might consider the AUD/USD's bearish momentum to be behind us, and now we can expect the price action to be on the bullish side. Of course, the trend is not that strong, not as of now, but if we consider this phase to be of consolidation and the subtle bias is on the buy side, then we can expect to profit with the possibility of AUD/USD moving toward this immediate resistance zone, the central pivot point of this month's pivot point series. Now, the AUD/USD is caught in between this resistance and the support on the lower side, and we have to now rely on the price action and is SMA formation here, and we have golden cross in place as 50 SMA has crossed above the 200 SMA. Now the 100 SMA is also catching up, and if we consider this consolidation phase starting from the 22nd of October, we can see that the AUD/USD has more or less been able to hold above 0.71. So in a way we can say, after looking at this price action, that the 0.71 has been a major support for the AUD/USD. So unless and until there is a break on the downside below this crucial support area, we can be fairly hopeful of AUD/USD consolidating and then starting to rally on the higher side. And that is the bet I am also willing to take. And keeping that in mind, I think we should be targeting the entry anywhere in this price band of 0.7090 to 0.7110. The price band is wide simply because we can expect any move on the lower side in consolidation phase. Sometimes the price drops first before the reversal. So if we are fortunate enough and something like that happens, then well and good, we can take our chances and the stop loss will be fairly close. And as of now, the price is upward of 0.7120. So we will need a further correction, maybe 10-20 pips should do well, and we will be able to cut down on our presumptive losses in case we happen to be wrong. So if we are targeting the entry anywhere in the vicinity of this 200 SMA, then I think the stop loss can be kept little below this immediate swing low, and stop loss anywhere in the price band of 0.7070 should be good enough for our trading setup. And for a risk of around 30 to 35 pips, I think we will need to be in a position to target at least the 70 to 80 pips so that we are able to get the risk reward ratio in our preference zone of 1 is to 2. And as I said while explaining the 4 hourly chart, we are looking at the possibility of AUD/USD moving towards 0.72. So keeping that possibility, I think we can indeed target the 70 pips on the higher side. So with that, we will be in a good stead, and I think if we keep the target anywhere close to 0.7180, that should be good enough. It might not be crossed in a single day, as for AUD/USD it will be almost a 1% move, and AUD/USD in normal trading days doesn't really move that much. But let's see how this shapes up for the remaining part of this week. Our assumptions are that this bullish undertone is likely to last, and by the end of the week we might see AUD/USD trading pretty close to 0.72. Now moving on to the commodity segment, here we will see gold, how the gold's technical outlook is evolving. The gold has been in a topsy-turvy environment, and it has been confusing a while. Even I think last week only I had done the session where I had said that the gold is likely to move towards USD 1950. But I was proven wrong, and the gold didn't really rally towards that, and it pretty much remained range bound and in a very tight range. Even now, it's becoming difficult to call, but as I see on this chart, I think now to some extent the bias is again turning bearish. We can't really be sure, or it's not like we are certain, but I think the probability possibilities are again tilting on the bearish side. So looking at the daily time frame chart and these EMA crossover structure, I feel that it's time we start looking for sell trades in the gold instead of buy trades, and with the possibility of gold dipping towards this immediate swing low, which is there around USD 1830. Now, if we want to optimize our entry and exit points, here we will have to rely on this pivot point series, and the price action has been essentially pretty confusing, and it has traded up and down on the both sides, and it hasn't really shown any significant tilt on the either side. But we can take it as the failure of the gold to hold and sustain the momentum on the upside, and again now it has dropped below this crucial dividing factor. So there we see a new opportunity emerging, and if we are going to use this central pivot point as our decisive marker, I think this price action, this current zone around USD 1900 can be utilized to that end by figuring out the possible stop losses and the target price. And if we see that on the lower side there is no immediate support in sight, and I am pretty much expecting the gold to crash lower in case we see the break on the lower side, and after this long consolidation phase, if there is any breakout, then I think it will move the gold towards its immediate swing low, which is there around USD 1848. So that is going to provide us an excellent risk reward ratio also. The regression curve is has now tilted to the upside, but given the fact that the price action has entered the lower band of this regression curve, in coming sessions we can expect the flattening of the regression curve, and that is something we will have to be mindful of. So relying on this lower time frame chart where the 50 SMA has crossed below the 200 SMA, we have death cross in place for the gold, and that is one more confirming factor for our trade setup, and we can be fairly confident of bearish bias in the gold as long as the price of the gold is trading below these 100 SMA zone. So we can utilize these price the confluence zone of these 50, 100 and 200 SMAs in between the USD 1900 to USD 1910 per ounce. So this confluence zone should also be our target area for entry for the short sale trade, and stop loss, I think the stop loss just little above this swing high, so the stop loss above USD 1920 should be good enough for any trading opportunity in the gold on the short sell side. So that even in case we happen to be wrong, we will be losing only around 1 percentage point. But as I said, in case we happen to be right, we are targeting the prior swing low. So that gives us more than 2 percentage point move on the lower side, as we can expect the gold prices to drop towards USD 1850 per ounce in coming days if we get any break below the immediate support area for the gold. So that's it from my side for today's session. If any of you have any query or any idea to share, you can leave the comments, and I would much appreciate the feedback and get back to you. So that's it from my side. And of course, don't forget that there is significant risk involved in the trading of financial instrument, and also one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.